I'd like to thank Landis for having me out here today. It's great to talk to all you folks. I hope at the end of the day that you take away at least one nugget from what I have to tell you over the next 45 minutes that helps you in your farming operation over the course of the next year, 2 years, 30 years, whatever the case may be. There's a lot of information out there right now. What we do at Pro Farmer, for those of you who don't know, we're a weekly newsletter. We publish 50 times a year. We take all that information, we boil it down, we give you perspective on what it means, and we give you the information so that you can stay in farming for the long haul. We are not trying to hit home runs. We do offer advice, and we hope that we don't hit the high in the market, actually, because there's more luck involved than skill if you hit the high in a market. So I'm always leery when somebody comes up to me and says, I hit the high in the market last year. Congratulations, you're one lucky SOB. You know, don't try to hit home runs. Singles, doubles, every once in a while a triple, and if you do hit a home run, that's going to keep you in the business of farming for the long haul. You're not going to strike out as much. If you're swinging for the fences, anybody that's ever played baseball, I got two little kids that I coach in baseball, and they're pretty darn good little players, and I tell them, don't try to hit a home run. They'll come when you make good solid contact. And along with that will come a lot of singles, doubles, and triples, and you're not going to strike out a whole heck of a lot. And there's a reason that both of them are the best hitters on their teams, because that's the approach that they take. And that's the approach that we try to take in our marketing. Okay, I want to run through the corn and soybean markets. If you have questions on other markets outside of corn and soybeans, I can answer them later on, but I'm going to focus my presentation on corn and soybeans, and primarily from a fundamental perspective. That's what we are at Pro Farmer. We're fundamentalists. There will be a couple charts up here, technical charts, and we use those for timing, selling purposes, those types of things. But I want to run through the fundamentals first off. On the old crop side of things, simply there's too much supply right now. It's burdensome, and you hear the word burdensome, and that's kind of got a negative connotation. But what the market considers burdensome is anything over 2 billion bushels, basically. If we get a carryover above 2 billion bushels, and we're well above 2 billion bushels projected for 16-17, they say we have too much. That's going to suppress prices. You get down between 1.8, 1.5 billion bushels, and it's considered a comfort zone. You get south of 1.5 billion bushels, and that's when they start to get concerned. If you get down to 1.2, 1.1 billion bushels or lower than that, that's when we see our prices really start to perk up from a supply perspective. So just keep that in mind. Those are kind of the numbers the trade uses for burdensome, comfortable, and tight. So when you hear those phrases, and I hear it all the time, people say, well, how can you talk about burdensome supplies when there's people around the world that are going hungry and starving? I'm not talking about the feeding of people. I'm talking about what the market feels comfortable with or doesn't feel comfortable with from a supply standpoint when I use those phrases. And then we have a lot of competing feed grains around the world. We have record corn stocks around the world, and we have a lot of feed wheat around the world. We have a lot of barley stocks around the world, so on and so forth. And as a result, that cuts into the demand base for U.S. corn. Whenever we're cutting into the demand base, you have limited upside potential. So I'm not going to be nearly as bearish as some people. They'll stand in front of you. I'm not a doom and gloomer. As a matter of fact, I'll show you on some of the price charts a reason why I don't think that we're going to see prices dive too hard. But at the same time, I also think that the upside is limited unless we have some kind of a weather event during the 2017 growing season. Now, I'm not a meteorologist, so I'm not going to promise you that there will or won't be a weather event that either drives the market up or down significantly this summer. But I will say that last year's weather was pretty darn ideal for a lot of people across a good portion of the country. And weather typically doesn't repeat itself from one year to another exactly. So the likelihood that we're going to have record corn and soybean yields again in 2017 is somewhere south of probable, in my opinion. When we look at it from a demand side, we have bigger demand. It's just not enough to keep up at this point in time, and that's somewhat of the concern. Corn use is projected to be up almost 7% in the current marketing year, but our supplies are projected to rise 11.4%. So we're increasing our demand base, and that's always positive. You know, I hear it all the time. Our supply is so big, we should encourage people to not plant acres. Well, we don't want to do that artificially. The way we do that is through markets, in my opinion, because if you have artificial, that distorts the marketplace, and that leads to longer term problems down the road. So I'm not a big hands-on type of person. Let the market do its job. The market right now, the way it does that is through the new crop price ratio. November soybeans divided by December corn, and it gives you a number. It's about 2.58, 2.57, somewhere around in there. I didn't check it exactly this morning, to 1. Anything above 2.4 to 1 typically favors soybeans. So the market's telling you to plant more soybeans than corn. Now the problem we face in 2017 is we don't need more soybean acres and we don't need more corn acres. But soybeans are going to win that battle, and we'll talk about that later on. Plantings are going to decline, no doubt about that. We just did our Pro-Farmer DONE survey, and I'll show you what those numbers are. And then unless we have some kind of a weather problem, we're going to see those carryover supplies remain plentiful as we move through the 2017-2018 marketing year. So that's the marketing year that begins September 1st of this year. Look at the carryover just from a graphical standpoint, and you see the big year-over-year increase there. I talked about anything above 2 billion bushels being plentiful, and we are well in the range of plentiful at this point in time. When you look at it from a global perspective, there's your record global carryover on the corn side. So you go all the way back to 10, 11, and we've seen year-over-year increases globally in the number of corn stocks. Now, some of that's distorted by the fact that China holds between 150 and 200 million metric tons of corn. So that's all factored into there. But that also has an impact on global demand as well. So those people that say, well, but if you take the Chinese stocks out, but you also have to account for all the demand base that China accounts for in that as well. So it can't just be a one-sided story. Just taking the Chinese stocks off of this is only one side of that story. Look at the supply and demand table. So, where did we come from? Well, back in the 2015-16 marketing year, we ended with 1.737 billion bushels of corn. That's carried forward, and keep that in mind. It's always important, and people say, well, we have too much corn. What's it matter how much we end the marketing year with? Well, it does matter, because the difference between 1.737 that we ended 15-16 with that becomes beginning stocks for 16-17 and the roughly 3 billion bushels that we're going to end this marketing year with in all likelihood is huge. We're talking 600 million bushels of difference there. That gets carried forward to 17-18. It would be really neat if we got to wipe the slate clean every single year and start over, but we don't. You carry it forward, and that's your beginning stocks for the next marketing year. So even when we're into a year like this in 16-17, where we're going to be more than plentiful by the end of that time frame, you still want to cut that number as low as possible, because that's less that you move forward to the 17-18 marketing year. And say you cut 100 million bushels off of it, that's 100 million bushels. And then say you have some kind of a weather problem and we don't grow a trend line yield this year, and you lop another 500 million bushels off, say, now you're 600 million bushels less than what it was originally projected at. And now the difference is, instead of 2.3 billion bushels for the new crop marketing year in 17-18, you're talking about something that's now into the upper ends of that comfort range. And that's why it matters how much you end the marketing year with on a carryover basis, because it goes from year to year. And that's why every bushel counts from a demand perspective. So as we break these down here, the 16-17 marketing year, so the current marketing year we're in until August 31st, we agree with USDA on the supply side of things. That's pretty cut and dried at this point in time. We know what the crop size was. They gave us that in January. The only variable there that would have any kind of an impact is the imports. And quite honestly, we have so much corn here in the United States right now that we don't have a need to import any. So that 55 million bushels is basically a set figure. Could move maybe 5 million bushels, but not enough to have an impact on the balance sheet. Where we want to focus for the rest of the marketing year is on the demand side, feed and residual use. Well, that's a component that's very confusing from USDA because it's feed and residual, and we know that residual is nothing more than a balancing number. The problem on the corn side versus the soybean side is on soybeans they tell us what the residual number is. On corn they lump it in with feed use. So we never know. That's a hard category to determine as a result. As we stand right now, we balance up with USDA on that. Food, seed, and industrial use, the biggest component of food, seed, and industrial use is ethanol production. And ethanol we have at 5.4 billion bushels, the same as USDA, of that 6.845 billion bushels. So we agree with them there. The one difference that we do have is on the export side of things, and we're 25 million bushels heavier than what USDA is currently on corn exports. Corn exports are doing great right now. The problem is at some point we know that that's going to slow because of the South American influence. Record crop coming out of Brazil this year, projected. Argentina grew a big crop, so we know that there's going to be a lot more export competition. The deal is that in Argentina and Brazil, they typically ship, and this is especially true in Brazil, they ship their soybean crop first and then their corn crop second. So the corn exports probably won't start kicking up until August, September, October timeframe through the end of the year. So we know that the marketing year ends on August 31st, so with that in mind, that isn't until that time frame when we expect the corn exports to pick up. We see a stronger export pace for the current marketing year than what USDA does. The difference there being 25 million bushels on carryover, 2.320 to 2.295 billion bushels. Not a lot of difference from a price perspective in all honesty. We have it up a nickel from where USDA projects it at 340 and 345. Now those price projections are cash price projections. I get asked a lot of times on how does USDA come up with them. Well, it's weighted based on how much they think they know was sold in each month of the marketing year. So we know that our heavier sales are at harvest time, right? So October, November, December have more sales weighted into that number than what June, July, August do. And then they take what is a national average cash price during those periods, weighted in, and that's how they come up with those numbers. It's somewhat guesswork, but it's more scientific than just throwing darts at a board and putting a number on it. Now, for 17-18, so the upcoming marketing year, the crop that we're going to put in the ground very soon here, weather permitting, our survey work came back and said that it will drop to 90.9 million acres on the plantings. So that would be down 3.1 million acres from last year's 94 million. We knew that the corn acres were going to drop and drop pretty significantly. Survey work probably showed that they were down just a little bit more than what we anticipated all the way through. Pretty close to what was anticipated, I would say, on that. 90 to 91 million, I think in that range is a pretty safe number on what USDA will give us on March 31st. If you plug in a trend line yield, so we see our yield go from last year's record of 174.6 down to 171, which is a trend line. You add your beginning stocks in of almost 2.3 billion bushels. You get a crop size of 4.2 billion bushels, and it leaves you with a total supply of 16.5, 16.6 billion bushels. So really what we're talking about is supply going from 16.9 down to 16.6. So about 3 million bushels of difference there. Even with the reduction in acres, even with the reduction back to a trend line yield, because we carried forward so much more. So we only realize a portion of that in total supply. Now on the demand side, this is completely a guess at this point in time. It's an educated guess. We have formulas that we plug into, but we're talking about the marketing year that doesn't start until September 1st and ends on August 31st of 2018. So this is way more guesswork than what it is on the supply side of things. We see more feed and residual use than what we have plugged in for the current marketing year. We see a slight reduction on the FSI, the food, seed, and industrial, driven by a reduction in the ethanol production there. And then the biggest change is your exports, and that's your South American competition that I just talked about coming into play. those bigger crops, much bigger crops in Argentina and Brazil than what they had last year. And it leaves you with a carryover about 2.3 billion bushels. So roughly steady with where we are. Now, what are we looking at from a price perspective? And putting prices on it is really hard when we don't have more than an educated guess on what the demand side is. But we put a price range of somewhere between 290 and 390 if that all plays out. So if we plant 91 million acres to corn, we have a trend line yield, the demand assumptions are accurate, you end up with 2.3 billion bushels of carryover, and you have an average price somewhere in that 290 to 390. So you don't see your price move a whole lot from where we are in the current marketing year. Now, to get an average of 290 to 390, obviously there's a dollar range there. You're probably going to trade at some point in time within that marketing year within that range, the upper end of the range and the lower end of the range. Your job as marketers is to have a range in mind, whether it's my range or someone else's range, your range that you make up on your own, and know that if you get into the upper bounds of that range, I should probably be a seller. If I'm in the lower bounds of that range, trust your range and the reason that you got to that range. And why are you selling at the low end of it? And that's the type of stuff that from a marketing perspective, those little nuggets, don't just throw darts at the wall and come up with a range. Come up with a range for a reason, whether it's mine or somebody else's reasoning. But come up with that range and then sell within that range and adapt for factors like weather that may influence the yield or the acres and that type of stuff. Any questions there on that while we got it up on the screen?
How's the wheat affect this?
How is wheat going to affect this? Well, wheat has the worst set of fundamentals of any of them right now, but when we project out to 2017, 2018, I actually think that we could see global wheat stocks turn down. We'll definitely see U.S. wheat stocks turn down from where they are because they had such a dramatic reduction in acres. They had a record yield that was actually percentage-wise greater than the increase in corn and soybeans over the past year. And so I think that the fundamentals actually turn up a little bit for wheat, and wheat's been a follower and kind of an anchor on the corn market. I actually see wheat as potentially being a leader to the upside and maybe helping the corn market a little bit. From a supply and demand perspective, there's just too much feed wheat around the world, which competes with corn, so that's what the anchor portion of it is right now. Other questions on this? Okay. We'll talk a little bit then about price ranges. So monthly corn futures, this is the monthly continuation chart, represents the front month contract on the board. And it just keeps rolling over. You'll see the little bit of an uptrend that we have in place going back to the 16 low. I marked roughly the 450 level there, which was the 15, 16 highs, almost an exact double top there. And then I marked the $3 level as support on that. And somewhere between that range of $3 and $4.50, and you say, well, it's a $1.50 range, we should trade within that. Sure, we should. But take it for what it is. I'll tell you that at $3, we had every reason in the world this year fundamentally with a carryover of at one point it was projected to be almost as high as 2.9 billion bushels. If you go back to this time last year, there were analysts saying, oh my gosh, we're going to have 2.9 billion bushels, 2.8 billion bushels of corn carryover. And currently it sits at 2.3, but we have fundamental reasons to be trading in that low $3 range, if not a two handle in the corn market. And quite honestly, we didn't even get close. I guess we got close a little bit there on that 16 low, if you want to call that close, within 25 cents. But if you look back and you go all the way back to 08, 09, 9, 10, 10, 11, we had multiple runs into that low $3 range, 305 to 302. And every time the doom and gloomers out there would say, oh, it's going to 275, 250, 225. I mean, you all heard it, right? And we didn't. Why? Because demand came back big and bold in that low $3 range. And we saw the same thing last year on the 2016 low. When we get into the low $3 range, we see demand come into the marketplace. We see physical demand, right? We know what that is. Domestically, ethanol plants, overseas exports, we see that come into the marketplace. But we also see the funds come back into the marketplace because it's a value buy at that point in time. And there's a lot of factors that come into play in determining what funds want to buy and when they want to buy it and all that stuff. But I'm telling you right now that low $3 range, and you can go back to 08 and 09 and show it on this chart, that when it gets that low, it's a value buy to them. So you see physical demand come into play and you see paper demand come into play. And that's a good, strong level of support. Does it mean that we can't trade below those levels? Absolutely not. I just don't think we'll spend much time down there if we get there. So I definitely wouldn't be a seller below that. 450 to the upside, what's it take to push above that? Well, it probably takes some sort of a weather event. Something that gives us some kind of extended push to the upside that pushes us above 450. So if it looks like that's in the cards for this summer, and right now, standing here, I can tell you, talking to meteorologists across the country that have some pretty high-powered tools that they use, very few of them suggest that there will be a weather problem this year. That doesn't mean that they aren't wrong, and things can change, but as we stand right now, so the likelihood of going above 450 is probably limited. So you're working with a $1.50 range. You split it down the middle and you got 75 cents, right? So if I'm at 375 or higher in prices, that's my target range for making sales, right? The midpoint to the upper end of that range. If I'm at 375 or lower, I'm probably not making sales unless I absolutely have to from a cash flow standpoint. And if you're a user of futures and options, you're probably going to look to buy or re-own some of those bushels if you do have to make sales in that lower end of that range. Questions on that? December corn futures, what are we looking at there? Well, we have our near double top around 405, resistance level up to 425. You know, if you're somewhere above $4, I think I'm a seller at that point. Probably takes some sort of weather event to get us above 425. We have the uptrend that's being challenged right now. Support, flat support in that 375 level. And then that 396. Does anybody know why I marked 396 on the chart? Spring crop insurance price was 396. So the average of December futures during the month of February was 396. History says, and you can go back, you can use a 15-year window. It's been 14 out of the past 15 years. If you look at the past 11 years, it's been all 11 years. At some point from February forward until harvest time, we trade above the crop insurance price in December corn futures. History's strong on that side that you will do that. So we're talking about, you know, $4 and above. Odds are that we will move above that. Odds are strong. I mean, if you take the 15-year, 14 out of 15, I don't know what that works out to from a percentage standpoint, but it's something well in the 90s, percentage-wise, that we will trade above 396 during the growing season. Now, if we have a weather year like 2012, and we don't project that that's going to be the case, where we had the widespread drought across the Corn Belt, you trade well above it. We were something like $2.80 above our spring crop insurance price that year. Well, that's an anomaly. That's something that doesn't typically happen. The average since 2006 has been like 42 cents above our spring crop insurance price. The low end, I think, is 8 cents. So if you take just the low end and add 8 cents to it, it's 404, and it puts you back to that double top around 405 that I have marked there. So use that information as you wish, but the odds are that we will trade above 396 at some point during the growing season. With that in mind, I don't think I would be too active of a seller anywhere from 375 down to 360, which was last fall's low. 405, now you're into the lower bounds of what history says will happen, up to 425. Yeah, now I'm the lights starting to go off and saying, hey, I need to be thinking about sales at this point in time. The other factor that comes into play there is your break even. What's your break even? If my break even, if I'm a low cost producer and my break even's $3.75, I'm definitely making sales at $4. If I'm a high cost producer and my break even's at $4.25, now I really got to think about it if I'm going to be selling below break even on a rally to $4. So those are the factors to keep in mind when determining where and when you want to make sales. Be more aggressive, way more aggressive, when it's in the upper bounds of the range, especially when it's at break even or better. Back off and trust what you know or what you think you know from a marketing perspective when it's in the lower ends or below your break even. Questions on that?
How do you filter in the basis cost on trying to figure all this out?
Well, that all comes into play. So what I tell people is if you call me up in the office and you say, Brian, should I be selling corn today? I'm going to ask you, first question, what's your basis? How's that compared to last year? How's it compared to your 3-year average, 5-year average, 10-year average, whatever you track? Your first determination on whether you should make a sale is always basis. Always. So if you don't track your basis right now, I would encourage you to, if you take nothing else from my presentation today, go home and track your basis and know how it compares. You don't have to do it on a day-to-day basis, but do it on a week-to-week or month-to-month or whatever the case may be, and know how it compares to normal, because that's going to tell you whether they want your corn or don't want your corn, want your soybeans or don't want your soybeans, how it compares to normal.
Well, as of right now, basis is to the point where they don't want your corn.
Right. And I think that will probably remain that way moving forward because we have that 2.3 billion bushels of carryover that we're dealing with. So our supply is plentiful. Now, you can get into areas, and that's why basis is so much different. I live in Cedar Falls. Our basis is different than what you folks have down here. Heck, some of you could be from one county over, and your basis is different than what they have here. Basis is very regionalized and very much a pocket. You know, how many demand sources you have pulling from it? So I'm going to use Northwest Iowa as an example because this is tremendous. They used to have terrible basis up in Northwest Iowa. Well, they didn't have anything, and then ethanol plants came in, and then they had the dairies. They were still there. The beef operations, the poultry, the pork operations, they have multiple sources pulling, and all of a sudden their basis improved significantly in that region. So it's how many sources you have competing for your supply is what drives your basis. But that all comes into play. If your basis is strong, you can write a basis contract. If your basis is strong and your price is strong into the range of where you want to make sales, why write a basis contract? Sell the cash. If your basis is weak but you like the price, now you're talking about something that locks a price and doesn't lock basis, a hedge to arrive contract, right? And knowing the tools and the situations, whether you're bullish or bearish, and whether the price outlook or your basis is bullish or bearish or wide or narrow, takes all those tools in the toolbox, and there's 15 or 16 of them that you can use, and narrows it down to 3 or 4 for that scenario, and then you pick the one that best fits your situation. Other questions? Yeah, go ahead.
Do you think it's much chance of the basis getting better by summertime?
Oh, it may get better. I don't think that we're going to see it improve like to the 3-year average is what we track. So the supply side just tells you that there probably isn't enough there to get it back to that level from a national average perspective. Locally, I can't speak to your basis here other than I know that there's piles of corn everywhere. And you know, if I'm in that situation and I'm selling corn, and I know that I drive by them every day and I see the piles, and I know that every farmer has their bins full on farm, and we get some kind of a rally, you want to be first in line, not last in line, right? Because your price when you're closer to the front of the line is better than your price when you're near the back of the line in that situation. Those are all little nuggets that may not seem like they mean a lot, but a nickel here and a nickel there may be the difference between being profitable and not profitable. Okay, on the soybean side of things, once again, we have an ample supply, upwards of more than 400 million bushels of carryover here. That's more than enough. As a matter of fact, it's the highest since 2006-07. Globally, record supplies. Huge supply coming out of South America. Demand is up. It's projected to be up 3.8% by USDA, but once again, same thing as with corn, not projected to keep pace with the rise in supplies, which is projected to be up 9.4%. That South American crop that we talked about, last year at this point in time, the Brazilian crop was getting smaller. In April, Argentina got roughly about 20 inches of rain in some areas, and that drove their crop down. They produced probably between 10 and 15 million metric tons less soybean supply last year than what was anticipated through the winter. This year, their crops are getting bigger. Okay, they've had really favorable growing season and their crops are getting bigger. And I've had meteorologists tell me that weather repeats itself, not necessarily from year to year, but from hemisphere to hemisphere. And if you look back to our growing season in 2016, it was pretty darn good. Very few complaints. There are pockets here and there but as a whole, it produced a record corn and soybean yield. You flip that, and what's South America dealing with right now? Pretty darn good weather. They've had some issues. Argentina had some flooding issues and stuff like that, but their flooding came in December and January this year versus April of last year. The crop had time to recover. But both their crops are getting bigger right now instead of smaller like they were last year. As a result, we don't have the rally potential. I mean, that was a huge, huge boost to both the corn and soybean markets last year, was the fact that the Argentine and Brazilian crops were getting smaller. We don't have that this year. Acres are going to rise sharply, no doubt about that. I'll give you our numbers from our survey. And then carryover, once again, unless we have a weather problem, it's going to remain hefty. So unless your marketing plan has some kind of factor built in for a weather problem, which mine wouldn't going into 2017, we're looking at a hefty supply situation at the end of 17-18. Huge, dramatic year-over-year increase in your carryover. I mean, you go back 3 marketing years, and we were very tight, and we went from very tight to burdensome just like that. That's what you have. That's what you get when you have back-to-back record crops type of situation. Globally, once again, record carryover there. Brazil's going to produce, let's just say, the number's getting bigger, but let's just say 108 million metric tons. That's about 80% of Brazil's record crop that we have in our back pocket for 16-17. Looking at from a supply and demand perspective, we ended the 15-16 marketing year just under 200 million bushels. Under 200 million bushels and the market starts to feel like it's getting tight. Anything above about 250, 300, and it's plentiful. So we're well above that. The current marketing year, once again, we match up with USDA on the supply side of things. That has been determined, except for in September, USDA may come back and revise the 16 crop. They have a history of doing that on the soybean side of things, not on corn. The usage side, match up on crush, record crush this year. Why do we have record crush? Because we have the soybeans. Huge year-over-year increase in crush because instead of the 197 million bushels that we had left over last year, we're projecting it to be over 400 million bushels this year. So our crush industry largely works on what's available. Whatever's left, we have a tendency to crush. Exports get the first dibs there. USDA went down by 25 million bushels in its last supply and demand report. We left our export number where it was. We're still 25 million bushels above them. The seed use for USDA is going to go up. That category doesn't matter. The seed required to plant the 17 crop, we know acres are going up unless every indicator is wrong. So that number has to be bigger than 97 from 15-16. Anyway, that number's going up. The residual is just a balancing factor there. That's why we've seen in the past negative residual numbers from USDA, because it's a fudge factor. It's just whatever it takes to get them to the carryover. They have carryover at 435. We're at 405. Price-wise, that 30 million bushels means nothing, and we actually have the same cash price, 960, built in than what they do. Now for 17-18, our survey results came back, and these were bigger than what we anticipated. We started at about 86 million acres last fall, late last fall, and through winter. So I was out doing these talks all through winter, and I was giving them 86, and then it crept up to 86 and a half, and then 87. Our survey results come back and say that you guys are going to plant 89.3 million acres to soybeans this year. So huge year-over-year increase there, coming off of a slight increase last year. You trim your yield back to trend line of 47.6 bushels per acre, but you have to carry forward that 405 million bushels. Your crop size is 4.2, and your total supply goes up to 4.64 billion bushels. So we go from 4.5 up to 4.6 billion bushels on supply. That means you have to use more to get rid of that excess that we've added to it. Crush, we see increasing again, being another record next year, getting close to 2 billion bushels. Exports, we're still optimistic. Even though the Argentina and Brazilian crops are record large, we're still optimistic we can see some export growth there. China being the driver. And why are we concerned about China on soybeans? Because they account for 60% of all global soybean trade. So the Pro Farmer Midwest Crop Tour, I had a Chinese national with me I think it was 2 years ago. We're driving across the countryside, and as we're driving, he said to the reporter in the back, he goes, "See that soybean field there? We take 3 out of every 5 rows go to China." And it's not just 3 out of 5 rows in the United States, it's 3 out of 5 rows of soybeans globally go to China. And that's why that matters. And you've probably heard that, oh, the Chinese demand pace is slowing, or it has stopped. No, the pace has slowed. Year over year, they're still importing more soybeans. And we project that to continue as their demand growth continues to build. But the pace of growth is going to slow. And that makes sense, right? I mean, you can't keep, look at the ethanol industry here in the United States as an example. You can't keep the incremental increases year over year, eventually kind of peak out. Doesn't mean that you can't still go higher. It just means that the rate of gain is going to be lessened. On the seed use, that doesn't matter, and the residual use doesn't matter. We have it projected at using 4.2 billion bushels out of that 4.6 plus, and it leaves you with a carryover of 440 million bushels there at the end of the marketing year. Price range, $9 to $10. So once again, similar to what we're looking for on corn, a price range similar to what we've seen in the current marketing year. Questions on the supply and demand table for soybeans? Okay, I just want to ask you guys real quick. Acreage, corn acres. Well, no, let's do soybeans. How many are going to plant more soybean acres this year than you did last year? Oh, come on. One guy? 2 guys? How many are going to plant more corn acres this year? Anybody? Everybody going to stay the same as what you had last year? Okay. Our survey results say that won't be the case. That doesn't, I'm not calling you guys liars, but I'm just saying that the survey results say nationally that there are going to be more soybean acres planted than corn.
Depends a lot on what time you get it in.
It does. Weather's an impact, prices from here forward's an impact, all that stuff. Now we did our survey work from the last week in February through a week ago. We shut the survey off on March 10th. So it's probably a little bit more accurate than those that did them in January and February because factors have changed since then. Attitudes have changed. Not saying that it's 100% accurate, we're just saying that we project even more soybean acres than most. Probably what the market's working with now is 88.5 million acres of soybeans. So our numbers say it'll be above that.
How come China doesn't grow more soybeans
Good question. They have a policy of being self-sufficient or as close to self-sufficient as they can on their staple grains. So their staple grains mean more because it's into their human diet. Rice, wheat, and corn, staple grains. They try to be 90 to 95% self-sufficient on those. Soybeans, they are more than willing to farm out their soybean production to the United States and South America. Now, there's been some talk that they're going to change that, but that takes a dramatic change in their policy for that to happen. How the Chinese value their hoarders, I can't imagine that they're going to shift away from that staple grain production, trying to be self-sufficient. They may shift a little bit, but huge policy change, I don't see that happening. Plus, they have a reliable supplier of soybeans every 6 months. We grow our crop, South America grows their crop, right? We just have to remain the most reliable supplier of soybeans to China. Now, Brazil's taken over, they're the lead exporter to China over the United States. That's just happened in the past 2 years. But we still have that's a huge portion of our exports. By far the most. I mean, Mexico's our #2 soybean destination, and if you put it on a chart, it wouldn't even show up. I mean, it's China and Mexico. So that's how much China means. I mean, they take 60% of all global soybeans. They are the market.
That's flipped over on corn.
That's what?
That's flipped over on corn.
No, we don't. We still control a good portion of it, but it's like a quarter to a third of global corn trade that we control there on the export side of things. The Black Sea region is picking up more on the corn side. They have advantages shipping into the Asian markets and we see this play out in wheat more so, but with freight costs. It just costs us more to ship it than what it does.
I've become aware of the fact that the Chinese are probably the leading part of pork production because that's what their diets take care of.
Definitely. China has gone through, they're trying to go from, you know, the old saying is everybody had a hog in their backyard type of thing. Well, that's literally what a large portion of their pork production was. They're shifting away from that to more commercialized base. But their pork production is down significantly. They've gone through, you know, that factor, the changeover, and some other pork reductions. So, you know, they bought Smithfield, and we're shipping a lot of U.S. pork.
How does Mexico compare?
How does Mexico compare? Mexico's our #1 pork market. #1 corn, #1 wheat, #1 pork, #1 beef, #2 soybeans. Everything else is pretty much #1. So trade deals, and we can talk about that if you want, but the trade deals, that's why those are important to Mexico. Looking at it from a technical perspective, resistance, the downtrend comes into play here about 10.50. Flat resistance $11 up to $12. You have your support just south of $9 down to just below $8. You know, if you get up into that $10.50, $11, $12 range, definitely a seller of soybeans, old crop wise. If you're down in that low $9 range or sub that, yeah, I'm probably not much of a seller at that point. You can argue the fundamentals in the soybean market at 400 plus million bushels of carryover suggests that we should be trading something with an 8 handle probably. So we're well overvalued from a fundamental standpoint. Large portion of that's the funds. Professional trading funds have remained long soybeans for a lengthy period of time. Now, the past 2 weeks, they've been lightening up on that length. We see prices come down, and that stuff happens, but they still remain net long. They still hold a long position there. New crop-wise, when you look at it there, you know, 1080 is a support level. Just south of that's about, or excuse me, 980, 975. The uptrend comes into play about 970, just a little bit below that. And then you have flat support going all the way back to late last summer, last fall, just above $9. To the upside, you know, The spring crop insurance price, I would ask you on that 1019 why that's marked, but you should all get that answer right after going through the corn exercise. So that's the spring crop insurance price at 1019. And then you have other resistance that goes from about 1020 upwards of 1045. So did we make sales? You don't have to necessarily raise your hand, but in your mind, did you make sales when we were up in that 1020 to 1040 range through the winter? And if not, why not? Because the market was overvalued at that point in time and it was giving you an opportunity. And I think that, you know, would I have went out and sold a lot? No. We sold 20%. Pro Farmer sold 20% at those prices. So we didn't even sell a quarter.
Our numbers would say somewhere between 10 and 20% got sold.
Yeah. Yeah, I think that's probably accurate. I mean, historically, just to dip your toe in the water a little bit, that's a pretty accurate number, 10%, maybe upwards of 20%. Questions on that from a new crop perspective? Now, the cash price range we put on it was $9 to $10, right, of what we think is realistic for 17, 18. Take your basis off of this because it's futures. And if you're in that, you know, upper end of that $9 to $10 range, you probably want to be a seller. And that's why I asked the question of whether or not you guys were sellers when we got to those winter highs. Okay, do I have time to run through these or am I long?
Absolutely.
Okay. Weather, what are some of the challenges for this year and the years ahead? Okay, some of these are stuff that happens every year. Weather, I told you I'm not a meteorologist. I can tell you this. La Nina bad, El Nino good, okay? We want higher numbers percentage-wise on the right than the left for a good growing season, right? The months there, so where it says season, those are the first letters of every month. So JJA, that's the one that we want to watch. June, July, August. You carry that forward and it's about 50%, 46% odds that we'll see El Nino good and only 7% odds that we'll see La Nina bad. Odds are heavily weighted toward a good growing season or a neutral growing season versus a bad growing season weather-wise. You can carry that out and the numbers get stronger, good, and a little bit stronger on the bad side of things as we move through fall. So it should be, you know, numbers-wise, should be a neutral to good growing season based on that. National Weather Service, what do they give us for the May through June period? What are we looking at? Well, warm temperatures. The temperature map up there, it doesn't really show up too well, but everything there that's, what is that, orange or what, red, whatever color it is, I'm colorblind. It's got an A on it, so it's above normal, so we're going to be hot, okay? Warm temperatures. Maybe you get into the fields a little bit early, maybe not. Precipitation-wise, above normal precip over the northwestern Corn Belt. Doesn't get down into this area. It's confined to that far northwestern quadrant or section of Iowa. So we're looking at, just based on this, if this all plays out, a relatively decent spring planting season. Macroeconomic factors, we got a strong dollar, but we're well off the January highs. Just yesterday, we dipped under par, and par's 100 for the first time in months. We hit a 14-year high back in January. Interestingly enough, you know, the whole discussion about what's it going to do to our exports, well, I'll tell you what, our exports stood strong in the face of the strong dollar, and we didn't really see a negative impact on it. Now, there's always a lag effect from the point you put in the high or you see the market, the dollar rally until it starts to have an impact. It's usually that lag factor of 6 to 12 months. So we started to rally back last May. So almost a year ago at this point in time, we started the strong rally in the dollar, pushed above par. We are into that 6 to 12 month period where it should have an impact. What markets does it impact most? Well, I would say wheat, probably the most. The meat markets, pork and beef, probably next. Corn, and then soybeans. And those impact how I would say they're impacted. Soybeans have the least impact from the dollar. China, what's China doing? Well, we need to know because not only are they the largest consumer of soybeans, but they're the largest consumer of all commodities around the world. They're seeing slowed growth. I think it was a 25-year low in their GDP in 2016, projected to be a little bit slower again at around 6.5%. And we'd die for 6.5%. With the amount of people that China has to employ, 6.5% is very sluggish for them. So that's one thing. Their factory growth has shown signs of improvement recently, though. That's a good thing for commodity demand. It's good for textiles, cotton in particular, some of the raw, the minerals and iron ore, copper, those types of things. Those can be leading indicators of commodity strength, especially the copper market. So that's starting to tick up a little bit. Eurozone and Japan, well, they're going through what we were going through over the past 3 to 5 years. They're trying to stimulate their economy. They're quantitative easing. They're getting to the point now where they're trying to figure out how they need to unwind some of that quantitative easing that they put in place. And it's easier said than done. Ask our Fed about that one. It doesn't just happen by saying it's going to happen. And they have weakening currencies. The rest of the world, who knows on that? You know, a lot of things are coming into play. Brazil, they were in a major recession, the worst recession they've ever had over the past couple years, showing signs of coming out of that. Argentina is now out of recession if you look at it from a technical perspective. So some of those emerging markets are starting to perk up just a little bit. There are major concerns around the world what will happen with Trump and some of his policies. So whether you're a Trump supporter or not Trump supporter, whether you back his actions, I think from an agricultural standpoint, what he does on the trade side of things is going to be very critical because trade means a lot to agriculture, obviously. Your financial belt is tightening. So what are we looking at? Well, our expenditures are down, but they need to come down even more. Fertilizer prices are down. They typically fall along with commodity prices, just not as rapid a pace. They'll climb very rapidly with commodity prices, but not fall nearly as quickly. Land costs, we've seen our land costs back down significantly. The cash rent side of things is probably the one that we're seeing be more sticky right now. And there's a lot of land changing hands. Around our area, northeast Iowa, definitely. But I think across the Corn Belt in general. There's a lot of landlord-tenant agreements that were in place, many for years, that have ceased, and the landlord has a new tenant now. And that's very typical in situations like this where you see the landlord want to keep prices as high as they can and the producer saying, hey, I can't produce at that price. Farm income is going to be down again, projected to be the lowest since 2009. Farm debt is climbing, and your debt-to-income ratio is rising. So we're seeing that tighten up and squeeze up. That just means that you need to be better marketers, right? And that's what I've tried to provide you today is information that can make you a better marketer. What are we looking at here? Probably going to remain lean for another couple years. 17 for certain, maybe into 18 and maybe into 19 if we don't see some kind of event that changes commodity prices. 2 jobs the market has. Figure out what a fair price is on every day. Some would argue that they don't do a very good job of that, but that is one of their jobs. And then the other one's, and this is a tough one, to put the high-cost producer out of business. So if you're a high-cost producer, you're being squeezed more now than the low-cost producer. If you're a low-cost producer, there's opportunity out there because the high-cost producer is being pushed out. And is that fun? Absolutely not. But is it part of what every business cycle is like? Definitely. And that's what we're going through right now. You know, what do? We need more demand to chew through the excess supplies. You do that by a period of lower prices. Macroeconomic headwinds make it a little bit more difficult. We're seeing some of those ease back that I showed you on that previous slide. And then, you know, it's not fun to market during these times at all. You think back to 2012, 13, 14 when we had record prices, and you guys could be the worst marketers in the world and still make a profit, right? It didn't matter. You woke up on any given day and said, well, I'm going to sell corn today, and it was at a profitable level. Unless the financials were really bad on your farm. Now you wake up on any given day and say, holy crap, if I have the opportunity to sell at a break-even price, it's a good day. I can put a smile on my face, right? And that's the difference between the good times and the leaner times. It just means you have to be more diligent. It requires babysitting. It requires knowing your numbers. It requires knowing what your outlook is. It requires all that stuff that leads to a lot of headaches, but yet it's what is required to get through it. And the last one there is, you know, I'm a big believer that markets give you opportunities. Last winter I was out and I said, the markets will give you opportunities. I took a lot of flack for that. Ah, you're too bullish and blah, 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 and all that stuff. And damned if we didn't rally in the spring, right, and gave us one opportunity. And then we rallied again in early summer and gave us another opportunity, right? The opportunity periods are just less, shorter lived during the leaner times typically, when you don't have a bullish outlook. But I'm a firm believer that the market will almost always give you an opportunity to be a seller at your break-even point or better. And you may say, well, God, why would I do this to break even? Well, breaking even's a whole hell of a lot better than being underwater for the year. And that's what it's all about. It's all about not necessarily what you did this year, but being in business 10 years down the road or 30 years down the road. Okay, any final questions before we wrap up? I'm getting into the lunch hour. I apologize, I took too long. Sometimes I do these meetings at night and then I'm between the beer, and then I really don't want to go long on that one. But. Questions, comments, concerns?
What about the ethanol going to Brazil? Think that's going to increase?
Ethanol going to Brazil. Well, right now, Brazil is a major market for U.S. ethanol, and exports, by the way, are the shining star. I don't know if you've heard it from your ethanol contingencies or not, but ethanol exports are very robust right now. They got back multiple years of where we were in decline, and 2016 was a terrific year for ethanol exports. Brazil was one of our major markets. They just have asked, the producers in the Northeast have asked their government to put in place or reinstate a 20% tariff on imports of ethanol. So that would impact us if that happens. I don't know what the likelihood of that occurring is or not, but keeping the Brazilian market open is definitely a positive. The other side of the ethanol is what are they going to do with the RFS? I think there's very low odds, close to zero, that they will abandon the renewable fuel standard. I don't even think that they'll alter it that much. Now, what they may do is change the point of obligation, and this is the whole Carl Icahn deal that was in the news 2-3 weeks ago. If they change the point of obligation, my concern is that then what's the incentive to keep producing more ethanol? But, you know, when it comes to the average consumer, all we have to do is keep the price of ethanol below the price of regular unleaded gasoline. Because the average consumer, and by average I mean like 90-some-odd% of them, pull up to the pump, look at the prices, poke the button that's the cheapest, and that's what goes into their vehicle. So as long as the price of ethanol is cheaper, we continue to use 10% of the all gasoline is blended with ethanol.
Are we going to get 15% or not?
15% is going to be a tough sell. So the trade-off on the moving the point of obligation, reportedly, with Carl Icahn from the refiners down to the blenders was that, and this is what RFA, the Renewable Fuel Association, supposedly signed off on, was that we would move to a 15% blend year-round. And that would help. If we could get 15% year-round, would help a little bit. So we could sell it during the summer driving season. That would help a little bit. You know, June, July, August, September, help a little bit. If we can get 15% as the standard instead of E10, moving it to E15, that would be huge. That would be monumental in terms of moving us up. Sometimes I put in an ethanol chart and it shows year to year, boom, 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 you know, big, huge incremental year-over-year increases. We've kind of leveled out, and some people think that that's a ceiling. I think honestly it's a plateau unless we see something really negative happen with the RFS. I think it's kind of a short-term plateau, and we'll move the next leg higher. part of moving the next leg higher is getting infrastructure in place and policies in place where we can move the production from where we have it here in the central United States to the consumption areas on the coast, primarily the East Coast, and then building our exports even more. All right, thank you.